Good afternoon, students. Welcome back to this discussion on audit. So, in the previous session, we were discussing about audit of banks. Okay, so today we plan to continue on this. So, the previous session was all about understanding of the environment in terms of the banking operations that we have, in terms of various requirements, whether it is from the perspective of RBI. Okay, a lot of rules and regulations to which the banks are subject to. Okay, a lot of things we discussed. We understood a lot of requirements, and therein we also understood that these banks are highly regulated, right? And we also understood as to why they are regulated. Okay, what's the rationale? So the rationale was all about this public interest in terms of the activities in which the bank is involved. So therein it becomes important. Yeah. Further, when it comes to the audit of any entity, so the understanding of the environment, understanding of the operations as far as auditor is concerned, that is very critical. Because without that understanding, to get on to the audit procedure, to plan the audit, becomes very, very difficult. Yes or no? Yeah. Further, once you understand the entity, once you understand the environment, what's the next thing you are required to look into? The next thing will be all about the accounting system. Yeah, or you can say a lot of processes within the organization which will impact the financial reporting. So we also discussed about the accounting systems which a bank is required to follow. We also discussed about various specific requirements to which a bank is subject to as far as their financial statements are concerned. Right? So all of these things are critical, because only then you will get on to the approach which the bank is required to follow. Correct? Now, moving further. Okay, and before we really move further, can you just help me understand in terms of the points that we have discussed so far as to what are the critical areas, what are those peculiar items which you will find in case of a banking or banking company or a bank, which may or may not be there in case of other entities, and which is very important for the auditor to consider, which will have some bearing on the audit procedures, on the audit approach. Yeah, so a lot of things that we discussed last time. So as per your assessment, what would be those critical areas? What would be those peculiar areas which as an auditor you would definitely like to consider or you would like to focus on? Over to you. Any thoughts? I understand now this audio is also open. So if you want to speak something, you can just feel free. Yeah. So you can raise your hand. You can just speak up. If you have any query, I would suggest you can just raise your hand and you can just ask the query. Okay. So of course, in the chat box, you can write it, but you can always speak. Yeah. So that's how we can just make it more interactive also. And we can get some more clarity in terms of what is required to be looked at. Over to you quickly. Okay, so Tanu says one of the point will be about having various branches. Great. Prem says critical areas could be advances, deposits, and the non-performing assets. Okay, what else? What else do you find in case of a banking company or a bank, which as an auditor you will consider to be critical, you would like to focus upon? Quickly, any more thoughts on this? By the branches, we can say that it's quite voluminous. Yes or no? And if that is voluminous, then you need to have strong systems in place to handle such volume, to handle such size. If you do not have the strong systems in place, then to handle such a volume may become very complicated. Yeah, so that's where you need a strong IT environment, strong IT systems. Correct? So that's one part for you. Other part is about the regulations, like Prem just mentioned. Okay, so laws and regulations to which the banks are subject to. That is going to be another focus area for the auditor. Correct? Third, of course, as around the items in the financial statements, because the nature of the bank is such that they will take money and they will give that money to a third party. Yeah. So that means advances, which will be assets in the books of bank, that will be an important area as far as financial statements are concerned. And if there are some amounts which are not recoverable, over which again you have some norms of the RBI. So you can say, in a way, once again, we are looking at the regulatory aspect or the regulatory provisions in relation to that. Then the deposits, which will be there, because deposits again is going to be a significant part in the financial statements of a bank. What else? Okay, so some of these we have discussed. So what is the one is the volume, IT environment. Third is laws and regulations. Okay. Fourth is some of the areas in the financial statements, that is about advances, deposits, NPAs. What else will you find in case of a bank? Any more thoughts on this? In case of a bank, what is good that you are going to focus upon? Yes, quickly. Quickly. Any more thoughts as far as audit of bank is concerned, which you would like to focus on? Okay, over which you can say there is some peculiarity which you will not find generally in case of other entities. Yes, over to you. Any thoughts on this? So I think one more area, like Tanu just mentioned, could be about the branches. Why? Because a bank will have various branches. Okay, and when we say various branches, it doesn't mean 5-10 branches. We'll have hundreds of branches. And for the branches, the auditors are going to be different. So it's not that one auditor is auditing all the branches. So the branches are audited by different auditors. For example, nationalized bank that you pick up. And then you have head office wherein the auditor is different. Okay. So therefore, this consolidation of the branches, which has to happen at the head office level, on the basis of which opinion will be given by the office of the you can say head office, or you can say opinion will be given by the auditor of the head office. So can you also tell me the term that you use for the auditor of corporate office or the head office? So there was a term that we discussed you'll use in context of that auditor. So what do you call that auditor as? So one is the branch auditor. Yes. Prem says principal auditor. No, but there is a term that you very commonly associate with the auditor of head office, with the auditor of corporate office, or you can say with the auditor who will issue the opinion on the financial statements of bank as a whole. So what do you call that auditor as? We discussed about it quickly, because at various places you will be required to use this term. Quickly. What do you call that auditor as? Yes. Tanu says statutory auditor. So of course that's a statutory auditor, but you call it as central auditor. Okay, and very commonly you call it as central statutory auditor or statutory central auditor. Okay, so central auditor is the term that you associate with the parent auditor or the principal auditor in relation to such type of entities. Fine. Clear? Yeah. Now, moving further. Now, we will look at some more reporting requirements. I think we have got some more reporting requirements. which a bank is subject to as far as audit is concerned. Okay, and of course, we are talking about audit of the financial statements. Okay, so let's try to understand that, and then we'll get on to the audit process, right? So now, as far as the reporting requirements are concerned, when it comes to a bank, so of course, we discussed auditor will have to issue the main audit report, auditor will have to issue the report on IFC. Then there is also a report which is called as long form audit report. There are various other reports which the auditor will be required to issue. Can you tell me whether CARO will be applicable in case of audit of a bank or not? Over to you. What do you think? Whether CARO will be applicable? If yes, who will issue that report? Branch auditor or the central auditor? Quickly, what do you think? CARO report, you remember? Yeah, so along with the main audit report, two reports you issue. IFC, CARO report. Yeah, so we are talking about that CARO report, something which goes as an extra of the main audit report. If you remember in chapter 8, we discussed about it. Yeah. So Tanu says, in case of a bank, it's not applicable. Yeah, very good. So in case of a bank, CARO is not applicable. So you can say to that extent you are relieved. Why? At least this reporting requirement is not there. Yeah. So that's something which is not applicable to a bank. Okay. So CARO is not something you will find in case of statutory audit. Clear? Now, talking about some more reporting requirements. So one, if you look at this RBI requirement, it says in relation to the implementation of recommendations of some committees on legal aspects of bank frauds, okay, which is applicable to all scheduled commercial banks, excluding regional rural banks. So in this case, if an accounting professional, whether in the course of internal or external audit, external audit means statutory audit, internal audit means internal auditor, or in the process of institutional audit, finds anything susceptible to fraud or fraudulent activity or act of excess power or smell any foul play in any transaction, he should refer the matter to the regulator. Any deliberate failure on the part of the auditor shall render himself liable for action. Okay, so in this case, RBI has placed the responsibility on the auditor. What is that? That's largely in relation to audit. So if any audit is observed, so let's suppose audit is found. Second is audit is not there, fraud is not there, but the auditor is suspecting, okay, so it may be there. Yeah, so it's a suspicious thing. Even in that case, auditor is required to report that to the regulator. Now, who is the regulator here? Can you tell me? In this case, who will be considered as the regulator? Over to you, quickly. So when they say needs to be reported to the regulator, who is going to be this regulator to whom the auditor will report? Yes, quickly. Who is going to be the regulator in this case? Very good. Tanu says it's going to be RBI. Dhanush has the same answer. Almaz has the same answer. Very good. Okay. So the auditor is required to report to RBI. And by chance, if the auditor doesn't do that, okay, he decides not to do that. Okay. So it's a deliberate failure. Or maybe it's a negligence on his part. then the auditor becomes liable for that. Of course, management will be liable, but the auditor will also become liable for that. Okay. Further, auditor should also consider the provisions about consideration of laws and regulations in an audit of financial statements. Okay, so when it comes to the financial statements require any laws and regulations which are applicable on the company to be complied with, which will have an impact on the financial statements of the entity. So the same consideration will have to be given in case of a bank also. In fact, in case of bank, this will become all the more important. Yes or no? Why? Because in case of banks, we have discussed, they are heavily regulated, right? Next, then there is an auditing standard in relation to fraud. See, the nature of activity in case of a bank is such that the chances of fraud are significant. Yes or no? Yeah, because their nature of business is such, and also their size is such. Yeah, there is a significant volume. It's all spread out so significantly. Yeah, so therein it becomes all the more important for the auditor to consider this aspect about what? Fraud in an audit of financial statements. So what does it require? It requires auditor to just look into it. Okay, so in terms of the audit approach, auditor needs to be wary of the fact that the fraud risk is there. Okay, so we are only talking about the risk involved. So we are not saying that for a bank, fraud has to be there for sure. No. Okay, so you can't say that. In fact, such an assumption will not be appropriate. But yes, risk of fraud is quite high. Okay, yeah, but at the same time, it says auditor is not expected to look into each and every transaction. Yeah, so there again, that's not the expectation that auditor will go and 100% testing. In fact, in case of a bank, 100% testing is not possible. Why? Because their volume is so significant. So that's why for looking into this aspect of fraud, whether the fraud could be there or not, it becomes all the more important for the auditor to look into the systems, to look into the management controls, to assess whether the management controls are operating in an effective manner or not. Because only then auditor will be able to get into this situation wherein he may feel comfortable that yes, everything around this risk of fraud has been taken care of by the auditor. Yeah, clear? Clear on this? Any questions? Yeah, so these are some of the reporting requirements, or you can say the considerations as far as audit is concerned. Any questions on this? Simple, easy to understand so far? All right, so now what we will do is, I think we have got one small question. So let's look into that sort of situation. Okay, so this question, if you can just look at financial statements of a bank are prepared in a specified format. We understand, yeah, so there is a specified format which you find in case of a bank. Discuss the legal provisions in this regard as applicable to financial statements of a nationalized bank. Over to you. Over to you, quickly. What are the legal provisions? If you want to speak, you can just speak up also. Yeah. So you can just raise hand, you can speak Anything that you understand. Yeah, so don't hesitate. Anything that you understand, please let me know. What are the legal provisions? Very good. Shreya says income recognition in case of NPA. All right. So that's one. That's in fact slightly different. Unlike what you see in case of any other entity. Of course. So that's a good provision. Or you can say very important consideration, particularly because of the fact that it's related to the income. So for any entity, income anyways becomes a very important aspect. Priyanshi says making a report to the central government around what? Can you tell me? So when they will give a report, issue a report to the central government, so it will be in relation to what? Can you tell me quickly? What about this? Great. So Priyanshi says it will be in relation to the financial statements. Okay. What else? What else do you find in case of this legal aspect which is required to be taken care of? So let's look at the solution. Yeah. All right. So now Banking Regulation Act. This deals with the form and content of financial statements of a bank. Okay. Which is also applicable to nationalized banks. Yeah. So every banking company is required to prepare the balance sheet, profit and loss in the format which is prescribed in third schedule to the Banking Regulation Act. So Form A is about the balance sheet. Form B is about the P&L. And if you remember, we looked at the financial statements of a couple of banks. We looked at their balance sheet. We looked at their P&L. So we found that as such, these are not forms. Yeah, but these are the formats which are prescribed. You can say in those forms, you call it as balance sheet, profit and loss. But of course, the format that we looked at are different from what you find in case of any other company. So for a company, what format is applicable? Format as per Schedule 3. Yes or no? Format as per Schedule 3. But in case of a bank, do you follow that format? Answer is no. Okay. For a bank, you don't follow that format. For a bank, the format is different. Yeah. Yeah. In fact, quite different. So can you also help me understand? I'm sure because we looked at the balance sheet. There was one peculiar feature in the balance sheet of a bank. We observed that day. We discussed that in terms of the balance sheet, this is something which you'll find in case of a bank as to how the assets and liabilities are presented. Do you remember that? Quickly. What was so different which you do not find in case of any other entity? Great. So Priyanshi says, one is the segregation of current and non-current. Okay, very good. What else? Great. Almaz says assets are reported in the order of liquidity. Yes or no? Yeah. So that's the other thing we observed, that assets were reported in the order of liquidity. Great. I think same is the response from Priyanshi. Very good. Okay. Yeah. Clear? All right. So now let's go back. Let's go back to our discussion. And now what we will do is, you can say now we can just start with the audit process. Okay. So now, audit process. So when the audit of a bank is required to be performed, now what is it that you will be required to do? Okay. All right. So now in this case, there are a lot of points which are covered in this particular chapter. Bank audit approach, drawing an audit plan, control environment. Before we really get on to these points, please remember one point, that when it comes to the audit for any entity in terms of its basic premise, you can say, will always be similar. The only thing which is going to change from entity to entity will be the laws and regulations. But as far as the audit approach is concerned, audit will not change. Okay, and let's try to understand this, maybe with the help of an example. Okay, now let me just share one file with you, so wherein we'll try to understand the approach. Fine. See, when it comes to the audit, now I'm not talking about banks right now, I'm just talking about audit in general. Yeah. So when it comes to the audit, or you can say audit of financial statements, you can say mainly, I'm just talking about a broad approach. Three things are required to be looked at. One, accounting principles. Okay, whether it is accounting standard or any other accounting requirement which is required to be followed. Why? Because if the financial statements are prepared, yes, if the financial statements are prepared, then of course they have to have accounting standards or the accounting principles. Yes or no? So if you have to audit the financial statements, then you need to look at the accounting requirements. Correct? Second, for the preparation, for the presentation of financial statements, you would have discussed that various laws and regulations will be applicable to an entity, whether it's a bank or any type of entity. Yeah. So various laws and regulations will be applicable. Okay. So when it comes to those laws and regulations, those are required to be understood, and one needs to take care that all of those rules and laws and regulations are taken care of. Otherwise, what can happen? Otherwise, this can lead to a problem. Yes or no? Otherwise, this can lead to a problem because some of the compliances may not have been taken care of. And third is, of course, application of various auditing requirements, or you can say auditing standards. right? Yeah. Now tell me one thing. Yeah, so it's a question for everyone. Whether we are auditing a bank or an insurance company, or let's suppose a company into entertainment sector, or let's suppose a partnership firm, do you think these three requirements or any of these three requirements will not apply for the audit of financial statements? Your thoughts. Do you think in any of the audit of any type of the entity, any of these requirements may not be there? Can you just think of any type of entity wherein these three requirements or any of these requirements may not be there? Shreya, Dhanush, Tanu, they are saying no. They all need to be considered. Dhanush is saying sole proprietorship. But for sole proprietorship, you will have some accounting principles. Sole proprietorship will also require some compliance of laws and regulations. And if that is required to be audited, of course, the auditing standards will have to be looked into. Sunil says these are required for every entity. Correct? So now one thing is very clear, that irrespective of the nature of the entity, irrespective of the industry in which the entity operates, irrespective of the size of the entity, audit approach will involve these three things for sure. Correct? Of course, it may happen that in some of the cases, laws and regulations are only few, and in some of the cases, it may be a big list. In some of the cases, accounting principles may not be so stringent. Okay, maybe a few accounting standards are required to be considered. Most of them may not apply. But as a matter of fact, all these three requirements have to be taken care of. Yes or no? Yeah. Now, the same approach, please remember, you will have to apply at all places. So you can say it's a kind of formula which is available for you. Okay, generally, if you look at bank, or let's suppose when you look at audit of different types of entities, okay, so what do you think? That these are quite complex, these are quite typical. Yes or no? That's the thought process or not? So when you get on to these topics, so generally there's a thought process that these are quite typical, at times complex. Yeah, that's the thought process or not? Yeah, so can you just relate to this? Over to you quickly, your thoughts on this. Yes or no? Shreya says yes, sir. That's correct. Now that is where this approach is going to help you. And that is why I'm just trying to create maybe a sort of formula for you, which you can just consider to apply to address most of the requirements related to audit. Okay, this is not only going to help you theoretically, but also practically. What is that? That audit approach that you would have covered so far. Okay, so far you have had so many sessions on audit. I'm not talking about this particular chapter. I'm just talking about audit as a whole. And there are a lot of areas you have understood. You have understood audit planning, you have understood risk assessment, you have understood various auditing standards to be applied. You have understood various line items of the financial statements, assets, liabilities, as to how they are required to be audited. Now, one thing which is going to be common for each type of entity is that all those chapters that you have covered so far will mostly apply to a bank also. In fact, that is something you are going to look at mostly in today's discussion. That various areas that you have covered in your previous sessions, in various chapters, are now going to be applied again. Again, why? Because now you are going to look at the financial statements of an entity. It's by chance that entity's nature of business is different, but audit is audit, and the financial statements audit is audit of financial statements only. Yes or no? See, one area which you will find changing significantly from entity to entity, from industry to industry, or you can say something which can bother you quite significantly. I'm not saying it will always bother you, which may be bothering you. Okay, because of which you may be thinking, no, this topic is very complex. You may be thinking this topic is, very typical. I have to just, cram it. Instead of understanding it when you get into that cramming, yes or no, you get into that approach or not. Sometimes you think, no, I have not been able to understand, or even if I have been able to understand, I will have to memorize this. So why is that required? Or in respect of which area you are required to do that? For laws and regulations. Okay, this is one area which may change significantly from one entity to entity. Okay, Shreya is also saying the same thing. Shreya is saying, sir, it's laws and regulations. That's correct. That's correct. But is that the only thing? Please understand, when it comes to the audit of financial statements, so do we only have this aspect to be considered as far as audit is concerned? No. There are three aspects. Okay. So even if you, let's suppose, lose out, maybe slightly in terms of some points related to laws and regulations, if you have not been able to memorize some of these points, so should this bother you so much? Answer is no. Answer is no. Why? Because your audit approach will be similar. That will be on the similar lines. Yeah? Clear? Now, when I say that audit approach has to be on the similar lines, that has to be moving in the similar sort of direction. Let's try to understand as to what do I mean by that. Okay, now what does it mean? When it comes to an audit, so basically it's a flow, or you can say it's a cycle, wherein you are required to perform four things. Planning. Okay, once the planning is completed, then you'll start the field work. Execution. Then you will get on to the execution. Okay. Once the execution is completed, you will start drawing the conclusions, or you will say you will conclude, right? And you will get on to the reporting. Correct? So is this sequential? At times, yes. But planning is not something that you'll just do at the beginning. This is an evolving process. So you'll keep doing this. Now tell me one thing, that this planning, execution, conclusions, reporting, have you not covered this in your earlier sessions? Have you not discussed as to what all things you are required to do in respect of all of these four things in your previous sessions? Shreya says, no, sir, we have covered this. So today, you'll see that because it's an audit of financial statements, so that's why we'll have to follow this entire process again. So what does it mean? It means your main concept is audit, which requires these four steps. Yeah, so there's a concept, and for that concept that you have an example. So your example is what? Example is that of audit of a bank, wherein you are going to apply this. Okay, so therefore all of these activities will require you to consider the accounting standards, laws and regulations, as well as auditing standards. So that's how you'll approach any audit. And that's how you'll also have to approach the audit of a bank. Okay, so now what do we need to do? Very simply. Now we need to get on to all of these activities one by one and consider the application of all of these one by one in the context of a bank. That's it. That's it. Once you are through with that, audit of bank is completed. But yes, one challenge is going to arise. Will be understanding of these laws and regulations. Okay, so this challenge is definitely going to arise. Why? Because this is going to be different in case of a bank. This is not going to be on the similar lines which you find in case of any other entity. Otherwise, remaining things are same. Otherwise, the overall audit approach will be same. Otherwise, most of the things as far as audit of financial statements of a bank are concerned are going to be same. Okay, clear? So now, as a next step, just to help you understand whether the same approach is going to be there or not. So what I'll do is I'll just take you to the study material, wherein the banking audit approach has been discussed. Okay, or you can say this is what your study requires you to consider. So what does it say? Draw an audit plan. What does it mean? Drawing an audit plan. What does it mean? Can you tell me? So when you are required to draw an audit plan, what would it mean? Tell me. So that's all about planning only. Tanu says yes. It's the planning. And is the planning anything new for you? Don't you know how the audit is required to be planned? What all things you are required to consider in respect of planning? The answer is yes. Answer is yes. You know that. You know that. Okay. So let's discuss again in general. So what do you consider? Nature and level of operations, of course. Why? Because till the time you don't understand the nature and level of operations of an entity, how do you plan the audit? Nature of adverse features, level of compliance. Level of compliance means laws and regulations, compliances, audit risks. What does it mean? Risk assessment. Okay. Inadequacy or breach of internal controls. So that means about the evaluation of controls, about the understanding of control environment, about the assessment of whether the controls are operating in an effective manner or not. And you may be thinking, but sir, all of these things we have already covered. That's correct. That's what now you are only required to apply. So you already have the knowledge. Now in case of bank, you are required to apply that. Simple. Okay. Then the second point, it's about the control environment. So what does it mean? you'll understand the control. Okay. And for understanding of the control, for the assessment of control, what's the first thing you'll start with? Risk assessment. Yes or no? Risk assessment. So in relation to various processes which the bank will have, now because it's a bank, so we'll talk about a bank. It's a company into, say, telecom, so we'll talk about a company, okay, or the specific activities of that company. So now for a bank, once you assess the risk, once you assess which all risks are significant, which all risks are not so significant, what do? You will then try to understand what all controls are in place in relation to each risk. And can you tell me who is required to get into this activity? Whose responsibility is this? Quickly, over to you. Whose responsibility is this? In relation to this, whose responsibility lies around this control environment, around this risk assessment? Tell me, who has the responsibility for this? Tanu says auditor. Any more thoughts? Quickly, yeah? Who has the responsibility towards this? Over to you quickly. Who has this responsibility? Tell me. Who has this responsibility? Very good. Shreya says it's the management or the entity. Obviously. Yes or no? See, the auditor is there to audit. But to have the system in place to say that the identification of risks has been performed, and for every risk to put up the controls in place. Will this be the responsibility of the auditor? No. It's the system of the management. And for the systems, will the auditor have the responsibility? No. Yeah. Auditor is there to review, but preparation is the responsibility of the management, or you can say the entity. Clear? Yeah. So therefore, in this case, now again, you should be thinking that in a way you are doing a revision of your previous chapters. Yes or no? Yeah. So you should be getting that feeling. I'm not sure whether that's true for you or not, but if you remember most of these points, you should consider as if it's going to be a revision. And if you are considering that, you are in a good position. Why? Because it's a revision. But if you believe, no, sir, it's not a revision, actually, we are looking at the new points. So that means somewhere, all of those points you would have covered, maybe you have lost some of those points. Correct? So anyways, that is going to help you. Yeah, so both ways, it's a win-win situation. Correct? Okay, now, as regards the control environment, what are the things which need to be set up in place? So the first is about who performs the control in the organization, and whether the person who has the control, does he even have the requisite knowledge? Is he authorized to perform this control? Okay, so you'll identify those persons. Can you tell me where do you get this from? So there's a document in an organization which will help you with this information. Okay, so this first point that we just talked about, there's a document which will provide you this information. Shreya says that's SOP. So very good. SOP, you can say, is a broad term, but there is a very specific document which will help you specifically on this aspect. Yes, any thoughts quickly? So there is a document in the organization which will help you with this particular information. Shreya says roles and responsibilities. Yeah, that's correct. But if we just get on to that term, yes, quickly, any thoughts? Shreya says KPR. What is the full form of KPR? I'm not sure about KPR. Yes, Shreya. And what about others? Just think about it. I'm sure all of these points you have already covered. Okay. Tanu says register of KMP. Shreya says key personnel responsibilities. See, I think you may call it by different names. So of course your responses have not been wrong. Yeah, so you are very much there conceptually. So there is a document in an organization, generally, which you called as authority matrix. Okay, or you can say delegation of authority. So this document will provide the information as to who has the authority to do what. Yeah, so that's the document. Who is required to prepare all of this? Management entity. Okay, next. What evidence is available to demonstrate that the control is performed? Of course, in relation to the control, what may happen is maybe an SOP has been created. Like Shreya just mentioned, SOP, maybe entity has created a document. What do you call that document as? SOP. Okay, so there is a document. For example, entity may have a policy. And we are talking about the banking entity. That any deposit, okay, which is accepted. Let's suppose if you go deposit something in a bank. I'm just telling you in general. I don't think that this will happen in case of a bank. Let's suppose any deposit which the bank will accept will require 2 approvals. So when you go deposit, it should have 2 approvals. Only then the acceptance will be there of the deposit, otherwise not. Okay, so this could be the SOP. But what do you find? That the deposit slips have been approved by only one person. So what does it indicate? That the organization has got the control in place. Where? On the papers. But practically it's not applicable. Practically they are not following that. So will that control be of any use? Tell me. Will that control be of any use? What do you think? The control which is only on papers, but practically you don't find that. Will that be of any use? Answer is no. Shreya, Tanu, they are saying no. So that's why there should be an evidence. And who will produce this evidence? Management. Why? Because they need to have the system in place that the controls are operating effectively. And how will they get to know about it? They will have to perform some tests. But you may be thinking, but sir, tests, how will the management perform? That's the responsibility of the auditor. That's correct. The auditor will have this responsibility. But management also has this responsibility to check whether the controls are operating in an effective manner or not. They need to have the evidence in respect of that. Management is supposed to do this checking. After that, auditor will also do this. And after that, auditor will also check whether the management has checked or not. Understood? So auditor will check whether the management has checked or not. Clear? Next. When and with what frequency is the control performed? Is the frequency enough to prevent, detect, correct any risk of material misstatement? Obviously. So how do you get to know about it? Once again from the SOPs, once again from the RCM. Do you understand what is RCM? So this term you would have covered earlier. Any thoughts if you have on the RCM? What is RCM? What does it require? What is its full form? Anyone? So I'm just talking about RCM. Okay, let me just write this for everyone. RCM. Tell me. Any thoughts if you have on RCM? What is RCM? What is the full form of RCM? Where is it required? How does it help in this process? Quickly, everyone. As around RCM, what do you understand? Any thoughts? Yes or no? Yeah, please confirm. At least say yes, at least say no. Over to you quickly. About RCM. Yes or no? Okay, so Sunil says reverse charge mechanism. Very good. Shreya says no thoughts, sir. GST wala is only the thing we remember. See, RCM in the context of your audit means risk control metrics in relation to risk assessment. You would have covered this. Now, what is a risk control matrix? Every organization needs to identify the risks. Yes or no? Tell me, for various processes, will they identify the risk? When they identify the risk, what do? They will set up the controls against each risk. So they prepare a document. These are the risks, these are the controls, and that document is what you call as risk control matrix. Okay? Yeah. So this document, of course, has to be in place. Something which you may be calling as SOPs, but SOP is more of a descriptive document in nature which talks about the policies and procedures. RCM is a more focused document which only talks about the activities and then the risks and then the controls against that with a complete mapping. Okay, so that's the role of a RCM. Now, in relation to RCM, management will also look at their practical application because again, it's a document, but its practical application has to be demonstrated by the management. Yes or no? Then comes the next point. Where is the evidence of performance of control retained? For how long is the evidence retained? Is the evidence accessible for the auditor? Of course, we discussed about this. Why is the control being performed? What type of errors are prevented or detected through performance of controls? Then, how is the control performing? What are the control activities? Is there any way that even though control has been put in place, but still this control can be bypassed? If the control can be bypassed, is there any way you can detect such a bypass? How are the exceptions or deviations resolved on identification? What is the time frame for resolving the exceptions or deviations? Okay, so all of these points are in respect of what? Control system, or you can say the control environment. Okay, so this entire environment of the organization, we are talking about internal one, not the external one. Okay, yeah, in respect of the controls which need to be put in place. That's what you understand about control environment. And if you go back to your chapters, which you would have covered, so there's this discussion on control environment over there. Can somebody recall that? Yes, quickly. Can anyone recollect this control environment? Yeah. Do you remember the chapter? Over to you quickly. Do you remember that chapter? In which chapter you would have covered this? Just think about it. Yeah. Let me know. Okay. Now moving further. Now moving further. Okay, great. Shreya has answered this. Shreya is saying internal control, sir. Very good. Next. Now the audit planning is going on. Okay, so we discussed that it's all about audit approach. So auditor is drawing a plan. In terms of plan, auditor is trying to understand the control environment. So all of these aspects he'll consider. Then it will also require a discussion amongst the audit team. Yeah, I think Priyanshi has also answered this. Very good. What is the discussion amongst the audit team? About entire planning. Yes or no? So planning doesn't mean that you will prepare a document and it will be circulated to the team members. Planning doesn't mean that the auditor partner will sit down and will explain some points to the senior members. No. Planning simply means that all the team members need to sit together. They need to have this complete understanding. They need to have an understanding as to how the audit is required to be performed, and then who is going to do what. Yeah, with a focus on the overall objectives of the audit. Yes or no? So that's how the planning is required to be looked at. So Sunil is saying entire planning, how they conduct the audit. Yes, that's correct. So various aspects could be there. Yeah. And this discussion which they do, you can call it as audit planning meeting or engagement team discussions. Yeah. Wherein they will talk about everything. They will discuss about everything. They will also discuss about the control environment. They will also be discussing about the previous year's audit issues. If it's a recurring audit, they will talk about the approach to be considered or the significant risk areas to be considered if that is a first time audit. Either way. Yeah. So all of these parts, errors that could be there, errors which have been identified in previous years, focus in relation to significant risk. In case of a banking entity, as we discussed, fraud is a very important consideration. So overall audit approach that requires professional skepticism. Can you tell me the meaning of skepticism? This again, you would have covered. So what is the meaning of skepticism? What is it that you are required to consider in case of skepticism? Yes, quickly. Shreya has answered this. What about this? What is the meaning of skepticism? So for an auditor, this term is always associated with the auditor. Supposed to be looked at by the auditor always. So Priyanshi says special attitude. Okay, what about others? What is the meaning of skepticism? A very important feature. or you can say quality which has to be there for an auditor? Yes. Priyanshi says suspicious attitude. Okay. So you are very much there, but what is the exact requirement in terms of skepticism? So Shreya mentioned this. It requires a questioning mind. Yes or no? Yes or no? Very good. So Priyanshi says eager to inquire. Very good. So in case of an audit, questioning mind is a must, because as an auditor, it's not that you will consider everything to be wrong, but it's very, very important that you try and understand everything. Okay. And you challenge things to ensure that things are correct. And that is possible when you have this question in relation to items that you review. Okay. Idea is not to have a negative mindset. Of course, you are approaching with a positive mindset, but you need to be critical in terms of your assessment. Clear? Yeah. Now, of course, when you will have all of these discussions, this will help the audit. So, advantages if you talk about. So, how is this going to help? As an auditor, you need to assess the risks which are possible only when you have this discussion. As an auditor, you will be able to focus on the significant risks, which is possible only when you get into this. Yeah. When you sit together, when you collectively understand things, when you have this interlinkage around most of the items, so that's how you can execute the work in a more effective manner. Delegation, sharing of responsibilities, all of these things are possible only through such discussions. Yeah. And various requirements in respect of the audit are only understood when you get into these discussions. For example, materiality, for example, risks associated, okay, for example, areas to be focused upon, any need for hiring some specialists in relation to different areas. Yes or no? Yes or no? Yeah. So this is, you can say, in general about the audit approach which is required to be considered by the auditor. Now, what we will do is we will continue on this aspect of, say, an audit process. It's not about only planning, it's about entire audit process. So now, as a next step, what we will do is that in relation to a bank, what all activities, what all steps you will have in place, or you can say which you need to work upon for this audit to be completed. So that's what we are going to look at next. Fine. All right. So now what we can do is any questions, any doubts, if you have, we can discuss that first and then we can take a break. Okay. Yeah. So any questions so far? Any doubts? If you want to speak, as I told you, you can just feel free to speak. So it's not necessary that you write down your queries. Yeah. So any questions, any doubts, please feel free to raise your hands, to speak up, to discuss anything. Yes. Any questions? No? All clear? Yeah? All clear? Very good. All right. So let's take a break. Yeah? And let's continue after the break. Rohit, we can break now. Okay? Yeah? All right. Hi. So let's continue with our discussion. Yeah. So we talked about this audit planning and some of the aspects around it. Now we'll just look into various aspects in terms of this entire audit plan. And of course, a lot of activities, a lot of steps which one will have to consider as far as audit of any bank is concerned. Okay. Again, I find this to be sort of repetitive, and that's the good part about it. Most of the things which we have discussed, you would have considered that these are quite generic in nature. Yeah. And that is again very, very important because except for the laws and regulations, as we talked about, what is going to be the approach? That's going to be same. Yeah. Okay. So now, when it comes to the banks, what's the first thing you'll consider? Like any other audit. Okay. So for any audit, first of all, what do? You will get into the acceptance procedures. If let's suppose there's a new client, new audit, so we'll want to evaluate whether such an audit needs to be accepted or not. For this, auditor will have to evaluate the eligibility, whether the auditor is eligible to perform that audit or not. Yes or no? Yeah, so that's the thing which the auditor will have to look into. Now, for that eligibility, various considerations are required. Independence, number one, that's a very, very important point. Then there are a lot of ethical requirements one needs to look into. Correct? Appointment letter. So then there's a procedural requirement. Yeah. So first of all, auditor will be requested for the appointment. Auditor will send the eligibility. Then the appointment will take place. Yeah. So as around all of these considerations, some of the very specific points are declaration of indebtedness. So RBI has advised that the banks, before appointing their statutory central auditors as well as auditors of the branches, should obtain a declaration of indebtedness. So what does it mean? Situation of owing money to the bank in any case whatsoever. So if let's suppose there's an audit firm, okay, this audit firm has taken a loan from a bank. Let's suppose that audit firm has taken a loan from, say, Union Bank of India. So what will you call it as? Such audit firm is indebted to Union Bank. So can such an audit firm audit the financial statements of Union Bank? Answer is no. Answer is no. Okay. Yeah. So you can say it's one of the eligibility criteria. Yeah. So who will have to evaluate that? It has to be done by both management as well as the auditor. Right? So that's why management will request the auditor that please confirm about this. Next, internal assignments in banks by the statutory auditors. Now, another thing, RBI decided that the auditors should not undertake statutory audit assignment if they are performing any other audit engagement with a bank. Now, let's suppose you have this Bank of Baroda. Fine. Say there is an audit firm which is performing the internal audit. Another firm which is performing concurrent audit. Concurrent audit, you can say, is somewhat similar to internal audit. So can these two firms be appointed as statutory auditors of Bank of Baroda? Answer is no. Answer is no. Okay, so that is again eligibility criteria. So this eligibility criteria needs to be looked at by both auditor as well as the Auditee means the bank, in this case, Bank of Baroda. Okay. So when the auditor will send the confirmation, eligibility, auditor will have to confirm that yes, the auditor is eligible to perform the audit. Okay. Clear? So this is something which is also required to be done in case of audit of any entity. Of course, in case of a bank, it's specific about the indebtedness. But when it comes to some of the restricted services like internal audit, so that's there in case of any other company. Yes or no? Next, planning. I think about planning we have already discussed quite a lot. Correct? So I'll not just get into this planning once again. Anyways, there are a lot of points around the planning which will have to come. Okay, next. Before the audit is accepted, so there is a responsibility which has been placed on the auditor. And what is that? A new auditor has to obtain NOC. What is NOC? No objection certificate from the previous auditor. So let's suppose ABC was auditing the financial statements of a bank. Now ABC is retiring. Why? Because generally in case of bank, there is a period which is specified. So after a specified period, bank has to change the auditor. Okay. Now let's suppose a new auditor is coming in. So the new auditor will reach out to the previous auditor, request for NOC. Only when this NOC is provided by the previous auditor to the new auditor can accept the engagement, otherwise not. So what is this NOC all about? Any thoughts if you have? I'm sure you would have covered this earlier. So what do you have in case of this NOC? Anyone? Over to you. In case of this NOC, what is required to be confirmed? Can somebody tell me? What do you find in case of NOC? Yes, quickly. What is there in case of this NOC? What do you find over there? Tanu says about business. So what do you mean by about business? Can you please elaborate? And what about others? Over to you. In case of NOC, what do you have? Or what is expected to be there? Tell me quickly. Okay, so let's try to understand this process. Okay. Now, NOC is about, you can say, a kind of clearance. So we are saying it's a bank. Which bank is this? ABC Bank. Let's suppose its financial statements for 1st March 2024 were audited by P and Company. Okay, now, for the year 31st March 2025, a new auditor is appointed. Say R and Company. So now R and Company needs to reach out to P and Company, and P and Company needs to respond to R and Company. So in this response, P and Company will confirm to R and Company. Now who is R and Company? New auditor. Who is P and Company? Old auditor. So you can say this is the retiring auditor. This is the new auditor. Okay. So now If let's suppose during the course of audit, I think Dhanush has answered this, that no objection is something which is given. Dhanush says legality of business by the previous auditor. See, if let's suppose P and company believes that R and company should not accept this audit engagement for any reasons. Okay, that is what P and company is required to communicate to R and company. Or if there is no problem, even that is required to be communicated by P and company to R and company. Sometimes what may happen is, for example, say entity. Now, what is the entity in this case? ABC Bank. Say the entity has not cleared the dues of P and company. So fees of the previous auditor is pending to be paid. So P and company will confirm, will respond to R and company that my fee is outstanding. Yeah, which can create ineligibility on the part of new auditor. Okay, so similar sort of situations are required to be therefore evaluated by the new auditor. Clear? Clear? Next. Now, once the engagement is accepted, so what will happen? Now for 24-25, R and company is appointed. So when R and company is appointed, entity means ABC Bank will give an appointment letter. Okay, so the bank will issue an appointment letter to R and company, correct? Now, in this case, before starting the engagement, it is the responsibility of this firm again to execute an agreement with the entity. And can you tell me what do you call this agreement between the auditor and the auditee? Tell me, what do you call such an agreement as? Over to you. Over to you. There's nomenclature which you use. Quickly. What do you call? Great. Pooja, Shreya, Tanu, they have answered this. Very good. That's called as engagement letter. So what is an engagement letter? Engagement letter is nothing but an agreement between auditor and auditee. Okay, wherein the terms of engagement are specified. So what are the terms of engagement? Scope of work, fee, management's responsibilities, auditor's responsibilities, deliverable on the part of auditor, any other terms and conditions. All of them, they need to be included in this. And this agreement has to be in place before starting the engagement. So will it be appropriate to start the engagement and then sign the agreement? No, that's incorrect. Yeah, so this has to be in place before the engagement is started. Correct? Now, another point. Now, please remember all of these points, even though we are discussing that now, see in relation to the entity, be it bank or be it any type of entity, you will have all of these procedures. You will have all of these steps being followed by any auditor. Yes or no? Now, next thing. When it comes to the new audit, we discussed that for 23-24, audit was performed by a different firm. For 24-25, R and company will perform the audit. Okay. So now, when R and company will perform the audit, so they will be performing the procedures on the financial statements of 24-25. Yes or no? Yeah. Therefore, procedures on financial statements of 24-25 will be performed by R and company. No doubt. So this is something which everybody knows, everybody understands. But in terms of this financial year 24-25, there will be some opening balances on 1st April 2024. Yeah, which is nothing but the closing balances of 31st March 2024. Yes or no? Yes or no? Yeah. So can you tell me if there is any requirement on the part of auditor in relation to this? Over to you. Is there any requirement on the part of auditor in relation to this? Tell me quickly. Over to you. Is there any requirement on the part of the auditor in relation to this? Tanu says yes. Can you tell me what is that? Over to you quickly. Please answer. If you want to speak up, you can speak. Quickly. What will be the requirement on the part of the auditor? Tanu says communication with the previous auditor, that we have discussed. Shreya says yes sir, to give clarification that he has not audited the. No, so that is something he'll be able to give once the audit is completed. So we have not completed the audit. In fact, we have not started the audit. Pooja says past performance. What do you mean by past performance? Tell me quickly. Quickly, over to you. Quickly. I'm sure this is something you would have covered. So let's try to understand this requirement. Tanu says about the procedures used to calculate. No. So for a new auditor, in addition to audit of financial statements for the current year, there's an additional responsibility. What is that? Audit of opening balances. Audit of opening balances. What is the meaning of opening balances? Means balances as at 1st April 2024. So this is also required to be audited by the auditor. You may be thinking, but sir, audit of financial statements for 23-24 has already been performed. Still, the new auditor has to perform some procedures in relation to this part. Yeah. Okay. Now you may be thinking, but sir, is it specific to a bank? Answer is no. This is something which apply to any audit. Brain is saying yes. So the tracing, yes, of course. And beyond tracing also he needs to go. So some specified, some limited procedures he'll perform. Yeah, but the procedures are required to ensure opening balances are good to go. Yeah, because opening balances are going to form part of the financial statements for 24-25 as well. Clear? Tanu says verification of closing balances. See, the term you'll have to use will be the opening balances. Why? Because the closing balance will be the balance as of 31st March 2025, which of course he'll do. But we are talking about this opening balance. Okay, clear on this? Clear on this? Yeah. Any questions so far? Any questions so far? All right, then I think there are a lot of aspects as around the planning. So let's try to flip through all of those points around the planning, which the auditor needs to look into. Okay, so communication with previous auditor we have discussed, engagement letter we have discussed, initial engagement. So for all of these points that we just discussed, there is a separate auditing standard on this. Okay, the next point. Now comes the aspect related to audit planning. So you may be thinking, but sir, that we have already covered. Yeah, but we are looking at all the steps. So we'll flip through all of these points once again. So assessment of engagement risk. Audit planning. Establish the engagement team. So now the auditor will have to select the personnel. He'll have to select the team. First of all, he'll have to decide whether the team will comprise of 8 persons, 2 persons, 15 persons. Means how many persons he will need. The mix he'll need. How many interns will be there? How many qualified personnel will be there? If at all there will be a specialist required. Okay. And this will be done on the basis of the skill set. Yes or no? This will also be done on the basis of the requirements of the audit, the complexity of the engagement, the size of the organization, yeah, prior experience, if any, of the team members. And then you may be thinking, now, sir, it's about the understanding the bank. I think around understanding the bank, its environment, we have already discussed this in so much details in our previous session. Yes or no? Yeah. Then comes the identification of risk of material misstatement. Okay, which all areas are going to be significant risk areas, which all areas are going to be not so significant risk areas. Then understanding about the internal control, means the control environment. Then understanding about the processes, including the accounting process. And this again, I think we have discussed in quite detail. Yes or no? Yeah. So the accounting system of the entity, that is something we need to look into. Risk management process. Once again, it's one and the same thing. Risk management process means the process of the organization, the system of the organization. What all risks they would have identified. Who is doing what? Remember that table we discussed? Who, when, where, how, all of those points. Okay, that's all about the risk. That's all about the controls. Who is doing what? All of these things Till the time they are not understood, can the auditor really get on to the audit approach, audit strategy, audit procedures? No, no. All of these things are required to be looked into in greater detail. Yeah. Then, understanding of the information system. We have already discussed that for a bank, information systems very critical. Why? Because the nature of business is such. Yeah. The way the banks operate, this becomes a critical area, or you can say a critical process. If this is ignored, one can say a significant risk will remain. Yeah, so that's why it cannot be ignored by the auditor. A lot of attention, a lot of focus of the auditor has to be around this part. Okay, and of course, then comes the next part about the engagement team discussions. Yeah, planning an audit of financial statements to chalk out the overall audit strategy. Okay, audit planning memo. So auditor will prepare an audit planning memo wherein he will list down all of these points: scope of the engagement, strategy, key risk areas, what are going to be the audit procedures on those areas, who is going to do what, means the team members, and the timelines around it, materiality, which has been considered. Okay, and in terms of the audit procedures, what kind of procedures are required to be performed on which all areas. So there could be certain areas wherein the auditor will want to perform detailed testing. On some of the areas, auditor may want to just perform limited procedures. Some of the areas, auditor may think he'll only perform analytical procedures. So all of these things will be put down, documented somewhere. Of course, a lot of points we have discussed, planning we have discussed, but this needs to be documented also. Yeah. So the document which the auditor will prepare, that is what you call as audit planning memo. Do you think such a documentation is important? Or do you think such a documentation is required at all? Your thoughts? Tell me. What do you think? Forget about the banking entity. For any entity, what do you think? Over to you quickly. Tanu says yes. Shreya says yes, important. But tell me, is it a necessity? Or do you think it's good to have that documentation? Okay, so two things are different. One is that if you prepare it, it's good, but it's not necessary. And second is, no, it's necessary. If you don't do this, then it's a problem. So what is your thought? Shreya thinks it is necessary. What about others? What about others? Do you think it's necessary? Or it's not necessary, but it's good to have? Yes, quickly, over to you. Tanu also thinks it's necessary. Dhanush says it's not necessary, but better to do this. Pooja says it's necessary. Sunil says it's not necessary, but good to have. Please remember, in case of audit, there is a separate auditing standard on audit documentation. Okay. Now, let's try to understand that aspect as well. Now, what does it mean? What does it require? So, if you say that you have a standard on audit documentation, so what does it mean? Okay, and what does it require? Yeah. Prem says it's necessary because the auditor has performed the procedures. See, audit documentation simply means the work which the auditor has performed, okay, whether it is related to planning, whether it is related to execution, conclusions he has drawn, reporting he is going to do. All of this needs to be documented. Now, what is the meaning of documentation? Documentation means it cannot be verbal. Okay. So documentation means it has to be in writing. It has to be in writing. So documentation requires work to be put down. Now, what is the meaning of writing? So does it mean that you will write it by hand on a piece of paper? See, documentation means whether you write it by hand, you do it in soft form, use an Excel file or a Word file or a presentation. It cannot be a verbal thing. Somewhere it has to be put down. That is what becomes the evidence of the work completed, work done by the auditor. If the documentation is not there, then it's considered as if the work is not done. Okay. Which means that when it comes to the audit planning, wherein we are talking about this audit planning memo, wherein you will include a lot of aspects related to planning. So if you don't document this, so later on, if somebody will ask the auditor that have you performed planning? So what will he show? Will there be any evidence that the planning was done? Answer is no. Answer is no. In such a case, what will be the outcome? That planning was not done. Okay. That's where documentation becomes a necessity. Okay, so documentation is not only important. Okay, it's not only good to have, it's a necessity. Because without this, even if the work is completed, that will be considered as if it's not done. Okay, so any evidence on the part of an auditor, how will that be substantiated? Through the documentation of the auditor. Through the documentation of the auditor. So if the documentation of the auditor goes missing, then there is no evidence. Clear? And it applies to every aspect of the audit. Okay, please remember that. Yeah, next. Next is about the materiality. So when it comes to the audit, another very important aspect is about the materiality. So in case of an audit, materiality is required to be looked into. Materiality is required to be determined. Any thoughts if you have on this, on the materiality, about materiality? What do you understand? What is required to be done in case of materiality? Over to you quickly. Any thoughts? Yes, I'm sure this is not new for you. Yes or no? This is not something new. So can you just help me understand what is the meaning of materiality? What is the understanding around materiality? What do you mean by determination of materiality? Shreya says determine the performance materiality, which is fine. But what is this materiality? What are you trying to do as an auditor here? How does it help the auditor? Where is this required at all? Quickly, over to you, quickly. Shreya says fixing the limits that the auditor can tolerate. Samohini says materiality indicates significant matters. Tanush says finding out errors or frauds and misstatements in transactions. So materiality is what? Materiality is your threshold. Let's suppose if this is the meter. Okay. So in this case, you are marking the threshold. Auditor is required to give an opinion. Yes or no? About what? About truth and fairness. Yeah. And how is that achieved? By obtaining reasonable assurance. Around what? That the financial statements are not materially misstated. Remember this term. Financial statements are not materially misstated. Yes or no? Yeah. So this is required to be looked at by the auditor. So it means auditor needs to look at the errors which are material. Material means which are quite significant. Okay. And for that significant, auditor needs to draw a threshold. Anything which is within this range will be okay. What do you mean by anything? Any misstatements, any errors. Up to this range, auditor will be able to tolerate. Means he will say, okay, no problem. But anything which goes beyond this, okay, that is something auditor will not accept. That is what you call as materiality. So this threshold is required to be determined. For every entity, this is going to be different. For every engagement, this is going to be different. And how is this important? Because on the basis of this threshold, auditor will look into the areas. He will decide what is significant, what is not so significant. He will decide the extent of testing. Correct? So materiality plays a key role in audit of a financial statements. Yeah? Clear on this? Next, consideration of going concern. Now, in relation to the financial statements. Yeah. Now, once again, it's again not something which is specific to a bank. In relation to the financial statements, there's a fundamental assumptions. What is the fundamental assumption? That the entity will continue to operate, and basis which financial statements are prepared. So every time auditor will have this consideration, because the management would have looked into this. But if let's suppose there are some events, conditions, okay, because of which auditor may believe that entity may not be able to continue as going concern. Yeah. So that is required to be evaluated. Why? Because this can have a serious repercussion on the outcome of the audit, on the reporting by the auditor. Correct? So for every engagement, this is required to be evaluated. But again, for an engagement, one needs to look into such events or conditions. When such events and conditions will be there, that is where auditor will have to consider this aspect. Okay. Yeah. Pooja says there are few fundamental accounting assumptions. Going concern, accrual, consistency. Very good. So one of that is going concern. And that is again critical to the audit. Why critical to the audit? Because this can have a huge impact on the financial statements. If this assumption goes, you can say, if this assumption is not appropriate, yeah, can you tell me what is going to be the impact if, let's suppose, going concern assumption is not appropriate? So what is going to be the impact on the entity? Any thoughts? I'm sure it's an accounting concept and you will be having some understanding around it. Yes, quickly. What is going to be the impact of a situation wherein the going concern assumption is not found to be appropriate? Over to you. Tell me, if the going concern assumption is not found to be appropriate, what is going to be the impact on this of the same on the financial statements? Priyanshi says it will have to be disclosed. It will have to be communicated to those charged with governance. Okay. Almas says disclosure will be required, and in such a case, assets and liabilities means the balance sheet will have to be prepared at NRV instead of historical cost. Shreya has the same answer, and this is a very big impact. Just consider a situation. If the financial statements are prepared with an understanding that the company is going to get liquidated, so all the assets and liabilities are brought to their NRV. Okay. So the financial statements will go for a toss. Yes or no? Yeah. So it's going to be a huge impact. Right? Okay. Now, moving further. Next, I think, is something which will fall in line with the requirements related to planning, and that is about consideration of fraud. I think this is again not something which is new, but in relation to a bank, as we have also discussed earlier, that there is an auditing standard which requires this consideration of fraud, this risk of fraud, and in case of a bank, this consideration becomes all the more important. Why? Because the nature of bank is such, and also because of the fact that public interest is involved in this. Yeah, their operations are such, right? Then assessment of risks, assessment of activities of the bank, all of these factors are important. Then moving further, see, when it comes to the banks, okay, so there are a couple of legal requirements, or you can say sort of regulatory requirements. One that is called as stress testing. Okay, you can say this is about a testing that determines the robustness of the software by testing beyond the limits of normal operation. Okay, let's suppose if there is a system, okay, that system has been prepared with a functionality, let's suppose, to handle 1,000 customers. Okay, and you want to test. Okay, in the normal course, it will be able to handle 1,000 customers. Okay, so if there is a stress means Let's suppose the volume increases. Yeah. So will it be able to handle that or not? Yeah. So such type of norms have been put in place by RBI, which the banks are supposed to perform. So whether the banks are doing this or not, and if at all these are performed, so what do you call it as? It's a part of their control environment. It's a part of their SOPs, which the auditor needs to look into. Only then the auditor will get to know as to how strong their controls are. Yes or no? Then there are some norms which have been placed on the banks. Okay, in relation to their operations, in relation to their capital requirements. Again, we don't need to get into that. This is very popularly called as Basel III framework. You can say internally banks are required to follow these norms. It's a part of their internal process. So auditor needs to look into it as to whether the bank is complying with all of these provisions or not. Further, another very important point and a very peculiar feature which you'll generally get to see in case of a bank. See, when it comes to a bank is subject to a lot of compliances. And those compliances include a lot of reviews. We discussed a bank is highly regulated. So those regulations require different reviews to be performed in respect of bank. For example, internal audit is there. Then you have concurrent audit. Okay. Then RBI inspections would be there. A lot of internal inspections would be there. Yeah. So all of these reports, or you can say all of these outcomes will have to be looked at by the auditor. In fact, for the auditor, we also discussed that the auditor of the bank as a whole means the central statutory auditor. Okay. He will have to be looking into the audit, or you can say audit reports of various branches. Yes or no? He will have to be looking into it. And different branches could have a lot of aspects which may be required to be evaluated by the central auditor. So this becomes a very important activity on the part of the auditor of the bank. And we are not talking about the branch here. We are talking about the central auditor, which you do not find in case of other entities. Why? Because other entities are not structured the way the banks are structured. So bank has this very peculiar feature which is different as compared to any other entity. And let's also try to understand this with the help of an example as to how this may have an impact on the bank. Okay, yeah. All right, so now what I'll do is I'll just take you to one situation. Okay, now in terms of the structure, if you remember, we discussed this structure some time back as well. Okay, Shreya has a query. Shreya is asking, sir, internal audit and the concurrent audit are the same thing or different? See, these are different. And let me just give you this understanding first of all, and then I'll get on to this requirement related to this branch audits as well. In fact, let's try to understand all these three things: statutory audit, internal audit, and concurrent audit. See, when it comes to the statutory audit, So statutory audit is all about audit of financial statements. Herein, the role is what? Audit the financial statements. Correct? Now, when it comes to internal audit, and concurrent audit, this you can say are largely similar in terms of the scoping requirements. Now, what is the scoping requirement? See, when it comes to these two types of audits, so they are not limited to finance, means they are not limited to the financial reporting. This may involve various aspects. For example, so what all things could be involved there? Of course, financial reporting could be one. Accounting, you may say, could be one. Compliances, review of compliances. Okay. Review of various transactions. Or you can say various processes. Yeah, review of various processes. For example, if let's suppose bank is holding some stocks, some other assets as securities. Okay, securities against the loans which are advanced. A review of the same. Okay, there could be a lot of operational requirements. Which is not limited to finance, related to different operations, different requirements. When it comes to the risk assessment and reviews of controls. So all of these are what? They are the scope areas when it comes to these two types of audits. Now the question arises that how are these two different? So the difference between these two, one can say, is that when it comes to the internal audit, okay, so this is limited in scope. But in case of concurrent audit, scope is quite detailed. Means the extent of testing in case of concurrent audit is going to be higher as compared to what you will do in case of internal audit. The period for which this concurrent audit will be performed. For example, generally you find every month a concurrent audit is performed by a bank. Internal audit is not performed every month. Yeah, so can you understand? The extent is going to be significantly higher when it comes to concurrent audit. Right? Clear? Yeah, Shreya, clear on this? Yeah. All right, great. So now moving further. Now what we will do is we'll also look into that aspect of branches as to how this may have an impact and how is that a very critical activity and how this may also be a very stressful activity at times. So just think of any bank. Okay, what is the structure? You have this head office, wherein let's suppose you have three auditors. Three auditors means they are joint auditors. Okay. Then you have lots of branches here. Okay, you have lots of branches. All of these are what? Branches. Now, when it comes to the statutory auditor, okay, now who is the statutory auditor? These are the statutory auditors. Let me just write down them as statutory auditors, or you can say central auditor. They are required to opine on the financial statements of the bank. They will also have to opine on the internal controls of the bank in relation to IFC, of course. Yes or no? Now let's suppose for all of these branches, you have different auditors. So say you have B1, say you have C. Let's suppose these are the auditors. D, okay, E, F. Say in relation to a particular branch, there's a non-compliance. Let's suppose this branch has some non-compliance in respect of any regulation during the year. So what will happen? This auditor will report to the HO, of course, to the central auditor. Yeah. So the job of this auditor is done. So when B has reported the matter to HO, his responsibility is done. Let's suppose in case of this branch E, a fraud was discovered. So this will also go to the HO. Yes or no? Let's suppose you have another auditor, say H. There's some accounting problem. So the trial balance of this particular branch, they had some accounting problem. So in this case, we discussed it was about non-compliance of some regulations. Here you found some fraud. And in this branch, you found there was some accounting issue. Okay, accounting issue means some accounting was not appropriate. Yes or no? Possible? Yeah. And similarly, different auditors may have different observations in respect of the branches which they would have audited. Now, as far as these branches are concerned, what is the role of the branch auditors? They will audit their branches and report the matter to the HO, or that will go to the central auditors. Now, what is going to be the responsibility of the central auditors? Can we say that central auditors are only looking at the head office? Answer is no. See, they are responsible for this bank as a whole. Yes or no? Yeah. So this entire bank, yeah. So this entire bank is the responsibility of what? Central auditors. And because it's very difficult for one auditor, or you can say one set of auditors, to look at hundreds of branches, so that's why they have this support system in the form of Branch auditors. Yeah, so this was all what? Their support system. You can say all of these auditors were what? The extended arm of central auditors in a way. So even if these are different audit firms, they are nothing but the extended arm in a way. Correct? But all of these matters which the branch auditors have highlighted, okay, which have been put down and which have been raised to the head office. Now, this needs to be resolved. This needs to be taken care of in respect of what? In respect of financial statements of bank as a whole. So that means disposal of all of these issues. Disposal doesn't mean that these need to be corrected. If there is a non-compliance, it's there. If there is a fraud, it's there. If there is an accounting matter, it's there. Yeah. Some of them may be resolved, some of them may not be resolved. So their disposal means how are these issues going to be addressed in relation to reporting of the auditor for the financial statements of bank as a whole will become the responsibility of whom? Can you tell me who will now become responsible for this? Who will now become responsible for this? Tell me quickly, over to you. Great. Shreya says it's the central auditor. So therefore, central auditor will have this additional responsibility. Yeah. And it's not going to be a very simple exercise. So can the central auditor say that I'll just report all the matters which have come to me? Not necessarily, because he needs to look at that matter. Maybe for a particular branch, okay, maybe if you look at this branch, this accounting matter could be significant. Okay, maybe the amount involved for this branch was rupees 10 crore. So for a branch, H may have considered this is material, but for a bank as a whole, this amount may not be material. So this aspect needs to be evaluated by whom? Again, central auditor. Yeah, so that's an exercise in itself, which needs to be taken care of by whom? Central auditor. Clear on this? Everyone clear? Yeah. So all right. So I think these were some of the considerations which were important for you to consider. Now, as a next step, what we are going to do is we will now start picking up various line items of the financial statements. Okay, so that's going to be our next step when we meet next. Various items means in the balance sheet, in the P&L, and what we will also do is alongside all of these items that we'll pick up, we'll also try to look at as to how those are presented in the actual financial statements, how the disclosures around them are included. So that will give you some more insights. Yeah, hopefully that will also give you some more clarity to help you understand and to help you memorize also. Yeah, okay. So that's what we plan to do in the next session. All right. Okay, so now any questions, any doubts that you may have, we can discuss that. Otherwise, we are through. Yes, over to you. Any questions, any doubts if you have? In case you do not have any questions, then we are through. Thanks once again, everyone, for your time and for this wonderful participation again. Yes, quickly. Any questions, any doubts if you have? No? So I'm just hoping that you are with me on this chapter because this is supposed to be slightly typical. But if you try to understand this, then you will find it's no different from any other entity. Yes or no? So that's the thought process we are just trying to create. Yeah. All right. So I think we are done. Any more questions? No? All right.
Okay, thank you, Ajal sir, for this wonderful lecture. And students, you can ask your questions if you have any doubts, any queries. You can ask regarding this chapter or any chapter, as you have started your chapter number 10. Almost 80 to 90% of your syllabus is completed. So you should start your revision. Okay, do not just study the class and then just leave it. Revise your previous chapters also, because your exams are also getting very near. So before coming to the next class, revise this chapter, revise the topics covered till now, and the chapters and the topics we have covered on Friday also. And if you have any questions, you can ask. Otherwise, we'll wind up this session. Okay, no questions. Okay, so see you in the next class, which is scheduled on Wednesday, 28th of May. Thank you, everyone. Thank you, sir. Yes, Rohit.